We're rolling. We're on.
What's up, Mo?
You okay, Pac? It's good to meet you in person. Yeah.
Likewise.
Yeah, wicked. So, Pac, you are CEO and founder of Round Treasury. Do you want to tell people what Round Treasury is?
Yeah. Sure. So essentially what we do in the simplest terms is we consolidate all of the different fintech point solutions into one cohesive ecosystem. And then we build AI on top of that to automate job-specific functions. So if you think about a finance team, so our customers are businesses.
Yeah.
If you think about a finance team, about 75% of their day-to-day is spent bogged down in like the low-value, manual, repetitive work.
Yeah.
That is very low knowledge intensive, rules based, and something anybody could really do. Okay. And they're not really using their degrees for that. So essentially, while everyone's building AI CFOs, we're actually building the operators.
Ah, interesting. Okay. And I mean, you talk about it in a way which sounds super simple.
It's not very.
Well, first of all, actually, let's think of what are a few kind of typical use cases or like problems that you're solving for your customers.
I can give you an example of like our very first agent use case. So we launched our first agent roughly around 12 months ago.
Okay.
So it was interesting. So we started off doing treasury management.
And
we got regulated maybe about 18 months ago.
Okay.
And then we launched, big bang, announced our pre-seed and launched the product. And we were getting customers, but like nobody was using the bloody product. So the insight we had, which was, if you can automate all of the jobs to be done around treasury management, then you unlock the ability to invest and actually put your cash to work.
Right.
So essentially we built our first agent workflows. So what it will do is, so if you think about a finance professional, it's great. Everybody wants to earn good interest on their cash, but if you lock up that cash or put it away, it actually creates more admin for you. Now you need to run a really tight 13-week cash flow forecast. 30 days before payroll, you better be remembering, like looking at that calendar invite to draw down on that cash. We've automated all of that. So essentially, you don't need to use a cash flow forecast. We just manage the underlying liquidity, place it in different accounts, getting you the best interest rates, the best liquidity, maximizing your FSCS, and then we make sure it's in the right account at the right time for payroll, invoice payments, and so on. That's
so interesting that, like on the surface, you can be, like you said, you can put away money and it looks like you're making a lot of money back, but the admin, the operational work that then is the knock-on effect of that is incredibly hard to manage and almost catastrophic kind of if you if you don't get it right.
Yeah. So we did when we were realizing, like, am I allowed to curse? No.
I actually don't know.
This isn't working.
I mean, David, our CEO, when he does these, I'm sure he curses.
No, but when we were like, shoot, this isn't working, we were like, right, we're going to do a big pain mapping exercise, revalidate all of our assumptions. And part of that was we got CFOs to stack rank. We gave them like a list of things in like the office of the CFO. And we said, stack rank these from 1 to 5, 1 being inconsequential for your day to day, 5 being mission critical, keeps you up on a Sunday night. Yield consistently came in around 2, 3.
Okay.
And what consistently came in around 5 was ensuring you've enough cash in the right place to meet liabilities, i.e. payroll, critical supplier payments.
Right.
There's nightmares. We just kept on hearing nightmares around forgetting, like, on a Friday the month before, forgetting to draw down on a 30-day account and then having to do it on a bank holiday the following Tuesday. So the next month they're 4 days late for payroll, or they have to pay HSBC 10 grand for early release. So that was the insight we had, and we basically solved that job to be done, and then we just started growing really quickly off the back of that.
Wow. It's such an interesting origin story where you said, big bang launch, didn't quite take off how you expected it. How did you keep your cool, or did you not keep your cool in that moment when it's like, oh shoot, this isn't going?
Like we raised a pretty good pre-seed. We had good runway. And like, I think everything we do, we just go back to customers. So like, even like, I'm sure we're going to make loads of mistakes going forward. We don't have all the answers or the crystal ball. Our customers do. So anytime we have problems, we just revert to speaking to customers and it usually solves the problem.
Yeah. Such a simple, but like a kind of timeless approach that you can take. Yeah. That's wicked. And I've been lucky enough to see a very, very, very short demo of what Round does. And it is pretty incredible. Especially when we think about the fact that, you are managing, as you said, it's company funds and it's critical workflows that have an impact, whether it's on employees or critical suppliers. How do you build in AI? How do you make your agents and make them at the grade that they can kind of be as secure and as reliable as they need to be?
With great difficulty. No, it's kind of like the way we started building agents, like really in the last few months, like we're building a huge amount of AI into the product.
Mm-hmm.
We initially started doing that just with like a generative chat interface and letting the AI then go off and do its thing. We found it just hallucinated massively. So when we were, let's say, testing invoice payments, we had a customer live on the call say, hey, can you basically scan all my invoices? Tell me any invoices below 5K, just go auto pay those. If we've already had 3 previous payment approvals with us, for example.
Yeah.
Then I was like, cool, did that, all paid. And then we checked and we're like, no, it didn't actually do that. The AI was just trying to make the client happy. It didn't even have the integration into, like it said, oh, we paid it from your HSBC. And we're like, we can't control your HSBC. So how we've actually approached it now is we use AI to build workflows.
Okay.
And we use AI for small parts of different processes. When it comes to anything money movement, money execution, that's all deterministic.
Okay. Oh, so you're kind of drawing on the best of both, but you're making sure that final step is deterministic, not inferred.
So how we're doing it now is essentially you can, it'll probably be launched by the time this comes out, but you can talk to Round and it will build a visual end-to-end style workflow, which you can then just confirm or edit, drag and drop, give it feedback on, and it'll build a financial workflow for you in real time. But once you hit confirm, then that runs deterministically.
That's really, really smart. Yeah, that's really smart. Because this is the kind of tension we always feel in the financial world, is that like, yes, AI can do all of those things, but one hallucination, like a 1% failure rate, is not acceptable.
Especially in finance. Like, nobody wants hallucination. Like if you have your private banker calling you, like hallucinating, you're like, no, dude, you're fired.
No, not good at all. Not good at all. And this is, at Griffin as well, we're super careful about how we bring AI in. Even our MCP server is like still in the beta phase. We're kind of, we've got to make sure things work perfectly before they can run and scale. So you're building this workflow tool. What other agents do you have in place at the moment that you're either working on or that kind of your customers are using?
Quite a few. So everything from accounts payable, so AI invoice capture, coding, fraud, anomaly detection. We just announced this morning, we launched Payroll agents.
Wow.
So you essentially just you have like an SOP, Payroll agent then plans, schedules everything, talks to a treasury agent. They basically coordinate the liquidity, the withdrawals, the payments. So what turns from like a end of month stressful situation, be like, crap, did I draw down on that account? Did I make a mistake on the CSV or going one by one into your bank? Turns into just a notification saying, hey, all of your employees have been paid. They all get emailed saying, hey, your employers have paid you, the money's on the way, chill. Like I know a lot of, like, especially at larger companies, it comes to like 5 p.m. on the Friday and they're like, we want to go on the beers, but money hasn't landed yet. And they start pinging the finance team, being like, where's the payroll? Is it coming? I
got to be honest, Pac, you guys are shipping incredibly fast. I feel like every week, every couple of weeks.
It's like I've run out of ways to make announcements. Now I'm like,
you can announce something. Well, you already did the workflows. You basically announced it. Well, how do you ship? How do you ship so fast? What is the culture at Round that makes it possible for you folks to do this?
I think one of the big learnings we had is the more confidence a developer has in what is being built, the faster they will build that thing.
Right.
So when we've made one or two mistakes in the past where we've built products based on hunches, or we think this would be cool.
Yeah.
And then when it comes to refining it and building it, we don't have that 100% validation for customers. So there's loads of back and forth. The dev time ends up getting drawn out. They'll build something and then we'll give it feedback. So like, oh no, I had it different in my head and so on.
Yeah.
So before we ever build anything, we do a lot of customer development.
Okay.
Like months of customer development up front. And then we build all of our products with customers. And we typically get 5 to 10 customers who will be onboarded and using that product, agreed to using it before it's ever even launched. So they'll be on calls with us using it from day one. So as soon as it's launched, we're getting feedback immediately and we already have live customers using it as well.
Wow.
So because we're building this so closely with customers, we basically nail down every single detail prior to going to dev. So once it hits dev, it's 1-2 weeks out the door. And we approach it in a very pragmatic, iterative process like V1, V2, V3.
Yeah.
And we don't deviate from that.
Wow. So actually, you're doing a lot of discovery work. It's not that I guess you're focusing your time on the most valuable bit, which is the bit with the customer and not engineering for the sake of engineering.
Yeah.
Okay.
So I think one of the most important things is also deciding what not to build.
Okay.
It's like there's so much stuff we want to do, but it's a prioritization piece as well.
Yeah, that was one of the things one of my first managers ever said to me. I was in the automotive industry, and they're like, our job is to decide what not to make, especially when it's so expensive in like capital intensive industries. And your customers are typically, they'll be happy to experiment with you. They like to get ahead of things. Yeah.
Mm-hmm. So in our latest funding round, a lot of our customers became investors as well. So we now have customers we have prisoners. But what was really cool is over like the past 12 months, every time I'm on sales calls with CFOs, founders, we have a very, very high demo to close rate. And the way I sell the product is I just show them product, and I just say, here's everything you need to make a decision by the end of this call.
Yeah. And
more times than not, they decide to become a customer.
Okay.
And I've had so many founders and so many CFOs be like, are you fundraising? Can I invest? So then we sent out an email to a bunch, not all of customers, but ones that have expressed interest. So now over 10% of all of our customers are owners of the business as well.
That is
and now
some
they have
dynamic.
to give us feedback.
I was about to say that switches the dynamic. But that is amazing. That's amazing that there's so much kind of passion for the product and for the business that the customers end up putting their money where their mouth is twice.
Literally. They give us their business cash and then they give us their personal cash. We hold no prisoners.
Does it mean you can charge them healthy prices, or is that's a conflict of interest? Probably.
We actually just went through a big pricing update, and it was super useful to have them as customers and to be vested in the business, to basically run our increased prices past them. But it's like they still get charged full amount, and they're happy to because they get value from the product. Yeah,
no, for sure. That's amazing. If we rewind quite a bit, let's talk about the kind of founding journey. Because also, correct me if I'm wrong, Pac, but your background is, you were in sales before, is that right?
Yeah, I actually cut my teeth doing door-to-door sales for coconut water. I was employee do you know Vita Coco?
Yes.
I was employee number 1 in the UK, in Ireland for Vita Coco.
Oh my goodness, that's got to go in our trailer.
They gave me a white transit van full of coconut water. They gave me a hit list of Tesco's. They were like, right, we've made a deal with Tesco head office. They've added our SKU to their inventory system. Now it's up to you to convince every local Tesco's manager to add basically order it.
Yeah.
And they're like, here's a van full of Vita Coco you can go in and bribe them with. I did not give a single pot of Vita Coco away. I drank it all myself, me and my housemates. But I was just literally going door to door, and then also going opportunistically to every corner store I could, getting them to buy it as well.
Wow.
And in 3 months, we got to $1 million in sales They didn't actually realize I was still in college. Then they were like, because it was originally on contract, and then they offered me a full-time job. I was like, guys, I've got to go back to my school studies.
That is an amazing story. I can already, the headline for the podcast is making itself from Vita Coco to Treasury CEO. That is wicked.
No, but I did that, and then I, while I was in university as well, I didn't really have interest in going to class. So I was just emailing startups, and I worked across a few startups throughout the university years. And then one startup convinced me to drop out of college and go over to San Francisco.
Yeah.
Which I did. Well, actually, I didn't. I did. I basically convinced the Provost, which is like the president of the school, to give me basically the ability. He wrote me a letter saying, you can go off, pursue entrepreneurial endeavors.
Yeah.
And anytime in the next 7 years, I only had 1 year left in my studies. Anytime in the next 7 years, you can come back and finish your degree.
Oh, that's amazing. Yeah.
So I did that. I got everything booked. And then I told my parents. They were not happy at all.
You preempted my next question.
Oh my God. Like, they didn't speak to me for months. But the way I saw it, I was like, look, I've completely de-risked it.
Yeah.
If this goes gangbusters, great.
Yeah.
Parents are happy. If it doesn't, I come back, finish my degree.
Yeah.
Parents are happy.
Yeah.
I had a great time. I was out there for a year, and I decided to come back and finish my degree.
Okay.
And then while I was in final year, I was also working on my own startup again.
Wow.
So with 3 other PhD students, which is very different. Starting a business is very different from working in a business.
Yeah.
And what I realized is, like, I have no idea how to build a product, and I have no idea how to like properly sell software as well.
Okay.
So then after I finished, graduated, I was basically like, right, I'm going to join a business where I'll learn to build product and I'll learn to sell a product. And I joined a product consultancy called Theodo, which is a French boutique consultancy.
Cool.
And their whole shtick is we'll train you to be a CEO or CTO within 5 years.
Oh, wow.
Yeah.
Oh, that's a really cool, that's not something you see often in a company career.
Trajectories. I had a few offers on the table. One was like, I literally can't remember the name of the company, some cyber security company who were like, their pitch was, you'll be a millionaire in the next 3 years.
Okay. Enticing as well.
And like, we'll pay you like shoot loads of money. And these guys were like, we'll pay you nothing, but you'll learn a shoot load. So I went with that one.
Was it true? Did it?
Yeah. I ended up starting around 4 years later, 4.5 years later.
Wow. Yeah. Wow. Yeah. So that, okay. So, and then in that company, then did you do multiple different things? So did you do some product? You did some sales? You did. Yeah. Okay.
Yeah. So there's essentially the tech track and the, let's say, business track.
Yeah.
I was on the business track. So I started as an agile coach, which is a fancy word for a scrum master, but you just work across multiple different teams.
Cool.
I absolutely got thrown into the deep end. You're meant to have like 2 to 4 weeks onboarding. And on my first day, they asked me if I wanted to move to Switzerland. And I was like, my first inclination was go on Google and look at the price of chicken fillets.
Not good in Switzerland.
Not good. So I asked, are you going to give me a pay rise? Yeah. And they were like, no, but we'll get you an apartment out there. And I was like, yeah, but I'm still paying for my apartment back here.
And I still got to pay for chicken fillets.
Yeah, I still got to pay for like 5x the price of chicken fillets out there. And I was like, I also moved to London because like my new girlfriend lives in London and my friends all live here, and I came over here to live in London. So I said no to that. And then day 2, they threw me directly into a project and like leading a big project. They were my first customers. I worked with them for 4 years, all the way to them getting acquired by Gallagher Insurance, who are the largest underwriters in the world.
Wow.
Really, really cool ex-military intelligence guys. That was one of the coolest projects I've worked on.
Wow. Wow.
So agile coaching, and then moving on into PMing.
Right.
So my first PM gig at Theodo was there is a insurance company in the US, a FTSE 250 insurance company called HomeServe. And they do house insurance, home insurance, and their main line of business is boiler insurance.
Yes.
And they had a huge amount of internal inefficiencies on the operational side when it came to fixing people's boilers and finding contractors. So they wanted us to essentially build Uber for kind of like track and trade, Uber for boiler repairmen.
Right.
And we did that. So I basically headed up product. They spun out a startup here in the UK called HomeServe Now. So I was working with the exec team directly back in the US.
Wow.
And then worked on a bunch of different projects. I was consulting. I was doing like one-to-one coaching with the chief digital officer of BNP Paribas for Asia, teaching him how to build. He was like, "How does software development work?" And I was like, "Dude, how the flip did you get this job?" Basically coaching them on corporate innovation. So I've done everything from solo founders, no tech team, to scale ups like Clio, who are now one of our customers.
Cool.
I was working out of Barney's office, one of my first projects.
Cool. Yeah.
When after they raised their Series A to large banks as well.
Yeah. Amazing. And did all of that experience from the from selling coconut water out of the back of a van to then this pretty amazing experience, like all over the world, doing consulting, doing different things. Did all of that then come together? And at the end of your 4.5 years, for you to say, okay, I think I really want to start my own company.
Yeah. So then the catalyst was, so part of the business track is once you kind of graduate beyond Agile Coach PM, you're now like commercially responsible for projects. So you're more like an account manager. And then I quickly moved into heading up new business for the UK. We grew quite rapidly to about 800 employees across the group, nearly 100 million in revenue. So I was basically responsible for new logos, new business for the UK. At the time, Web3 and crypto was really taking off and I got hugely into it. I was reading every single white paper.
Yeah.
So I started building out the Web3 practice. And then I was like, do you know what? I could actually just build this myself and strike off. And then at the time I was also I was going to Web3 meetups and I bumped into a guy called Tom Phipps who worked for Entrepreneur First. And he was kind of like telling me about it and saying, here's how it works. I'd never heard about it. And my employers were like, hey, Pac, instead of leaving and starting a competing consultancy, why don't we give you some employees, we give you some funding and you start a Web3 consultancy within the group. And I remember the CEO at the time, I was like on the fence and I remember he had a talk with me and he's like, look, Pac, this is a great way to get experience as a CEO. Like, you know, when you want to start your own business, he's like, there's no like skin off your back. Like it's low risk. Like what do you have to lose?
Yeah.
And I went home to bed that night and I was like in bed thinking about it. And I was like, what do I have to lose? What do I have to lose? And I was like, wait, I have absolutely nothing to lose. I was like, I got shoot all savings. I don't have a wife. I don't have kids. I'm in my 20s. If it all goes to crap, just go back back to my parents' gaff and apply for another job. So I came in the next day and handed in my notice. And then applied and got into, first applied. I was already accepted and then basically accepted it and joined Entrepreneur First.
Wow. Yeah. Wicked. Was Entrepreneur First the beginning of Round or not quite? Oh no, it was. Okay.
That was the beginning. So we were in the Web3 cohort.
Okay. Interesting.
And I wanted to build a crypto neobank for consumers.
Cool. Yeah. I love the smile on your face.
Cool, right?
Is that Coinbase?
No, it would be like D-Block today.
Okay.
I like to say we were just a bit early. But yeah, so I met my co-founder on the first week and we were working on this and Entrepreneur First were like, guys, you're not making any progress. Break up. They're like, find new co-founders. And they were telling us to break up and we were like, no, screw that.
Yeah.
We're going to keep on going. And we were posting into Telegram groups and someone said, hey, I don't give a crap about crypto neobanking for my personal cash. He's like, I'm a founder and of a Web3 company and they keep shutting down my bank account. It's like, if you can solve that problem, I'll pay you a lot of money. So we jumped on a call and then we posted in the groups like, anybody here tried to have a business, tried to open a bank account and it just like, everyone just went mental, being like, here's my experience, like skeleton on fire, memes and everything.
This was also at the period when, like, it was pre-Genius Act. It was when crypto was almost like a bit of a taboo subject. Yeah.
And then we basically got a ton of validation. We wanted to understand why banks wouldn't open accounts for them or bank them. So we spoke to like Chief Compliance Officer, SVB at the time, chief compliance officer of Revolut, Lloyd's. We basically realized chief compliance officers have a lot of free time and don't really do anything because they all agreed to jump on calls, and then they all offered consulting gigs on the side for us. I was like, what? Yeah, and then we realized it was a compliance problem and not a product problem.
Yeah.
We realized that we could solve it by building a compliance process and compliance model geared towards high-risk businesses. And we basically got Modular to like give us like a proposal on the side. We got our first like ex-customers to commit to using it. And we had like a compliance officer from the chief compliance officer of Railsr Bank who just crashed recently before that, to come on board with us. And then EF went from being like, you guys need to break up and find new co-founders to we're putting you forward for early IC. So 7 weeks from the start of the program, they invested in us.
It pays not to take advice sometimes.
Yeah, something I learned is 95% of all investor advice is bad advice.
I was going to ask, that also preempts another one of my questions, which was, what advice would you have for some founders?
I wouldn't. They probably know more than me, whatever they're building. My only advice is like to speak to your customers. That's probably the most universal. But
I'm seeing that as well, even in the entrepreneur first days of how you're like, I'm going to say follow the lead. I don't mean from a sales like context. I mean, like you see a piece of insight and you follow that. And you go and find the people who have that insight or have expertise around it, and you go and speak to them, you listen to them, and it's obvious, like you keep going until it's like
you pull on a thread.
Yeah, that's a better way of putting it. Yeah. It's so simple when you describe it, but I guess when you're in the moment and everything's happening, it's so easy to forget that, and you're distracted by all the other things.
Yeah. Because like right after we did IC, like I remember Matt Clifford, he was on the IC panel.
Right.
He was like, you guys are probably going to be working on something different by demo day. And he was right. We pivoted 2 weeks later. Because then Modular came back with their actual quote and we're like, that is all the money we have. So we were like, shoot, we have a few months to demo day. What do we do?
Yeah.
And then we went back through all of our cost dev notes, realized that most Web3 founders, in addition to not being able to bank, they had to sacrifice liquidity for yield and user experience for trust, in that most businesses or startups had a neobank.
Yeah.
Great user experience, but they wouldn't keep any cash in it.
Yeah.
And a traditional bank like a HSBC or SVB that had a terrible front-end user experience, but they trusted to keep their cash with it. And then we said, okay, cool, let's validate it. We did 2 weeks. We said, how do we solve it? BlackRock money market funds, pretty straightforward, liquidity. Can we do this legally? Yes, we figured that out. And then from a commercial risk perspective, we got like our first, again, our first 10 million in deposits committed. None of those ended up actually turned into customers in the end.
Okay.
But we took 2 weeks, sprinted and validated the pivot into that. And then we went out, got the regulation we needed to get just in time for demo day, got our first customer, and used that to then go raise 1.5 million pre-seed.
Wow.
Like $2.1 million.
Wow. What a story. And what stage are you at now in terms of funding? Your
seed. So we just raised $6 million seed.
Amazing. Congrats. Yeah,
thank you.
That is very, very cool. Okay. So it's still quite early days, but you have a ton of customers, you have a ton of traction, you have many AI agents running. Yeah. What are you working on at the moment? What is the kind of next thing that you're thinking about?
In what regard?
In terms of product, in terms of, is it kind of, are you looking at geographic expansion? Are you looking at kind of more depth in terms of the operations that you support for companies? Are you looking at a different kind of target sector? Yeah.
Yeah, depth. Depth and geography is a big one. So on the product side, we're in a lot of conversations with public companies who are all facing very similar problems.
Right.
So that is one area we are exploring and in commercial conversations with quite a few at the moment.
Cool.
As well as just expanding the AI use cases.
Yeah.
And the other is we want to go to the US as soon as possible as well.
Yeah.
Part selfishly, just because I want to get back. I was telling you before the podcast, I want to get back to the US.
Yeah.
But also like the opportunity over there is just huge. The market's so big. The regulation on the fintech side is pretty relaxed compared to the UK, so it's much easier to get regulated over there. And we already have a growing proportion of our customer base who have US operations. It's like our fastest growing segment of customers at the moment.
So I guess, being UK, US, having operations in both would also help with the kind of bigger companies.
Yeah, exactly. Yeah.
And I imagine, correct me if I'm wrong, but I imagine a lot of the problems that businesses here are facing with managing their funds and the operations are very similar problems globally. That gives you a quite nice addressable market.
Literally. Like, I thought it's funny in the fundraising process when investors they all want us like to Tam and Sam.
Yeah.
How big is the market? And I was like, how many businesses in the world that have cash and finance teams?
Every real business.
Literally every business in the world.
Yeah, that is quite an opportunity. That's very cool. How many people are you at the moment?
We are 11.
11 people, and you have. How do you manage to get so much done in such a small team?
I think it's the team we've hired.
Okay.
So we interview a lot of people. We have very, very high standards.
Yeah.
And like my co-founder Hyan interviewed something like 180 developers, and we hired altogether like 3 of those developers. And like I only just brought on our first commercial hire just about 3 months ago.
So you were doing all of that before?
Yeah, everything. Like we because I'm a product guy, but
yeah,
it's like me and my co-founder are product guys.
Yeah.
So we just naturally went, let's spend all the money on product. And I just ended up doing all founder-led sales. It worked. Like I got us to over our first 100 customers, and got us to raise our seed round. And now we're basically building out everything on the go-to-market. We're hiring like an absolutely stacked GTM team.
Yeah.
We're hiring a few more now. So really this next phase is about scaling what's working.
Yeah. Yeah. Okay. Yeah. You figured out the core formula.
Yeah.
And now, you want to scale that up. That makes a lot of sense. That is really impressive. Such a small team, the amount of product that you've built, the amount of commercial, I guess traction isn't even the right word. The amount of progress you have in that space is really, really cool. Wow. Any other advice for people starting? Anything you would do differently if you were starting Round again? Maybe.
Most of it.
Can't have been that bad.
No, like probably two of the things that slowed us down a lot. One was taking advice from investors. Mm-hmm. So I hope they don't listen.
We've
to
said worse.
No, so when we were in Entrepreneur First, they like for the demo, we wanted to raise a small angel round because we wanted to get regulated. We wanted to be able to sign infrastructure partnerships. The ADK they gave us is not enough to do that.
No,
we would quickly. Like, the thing we realized, we'd very quickly run out of runway before we could probably raise a round.
Okay. So
what I actually did was I spent a few weeks calling every single regulatory umbrella company in the UK. Just cold calling all of them. And I found one that I convinced to, instead of us paying them a monthly fee, like as an appointed representative, like any money down, any monthly fee, I was like, we'll just do a rev share with you.
Very smart. Very smart.
One of them agreed. They didn't have retail permissions. They had professional permissions, which meant we could only work with businesses who had 20 million in the bank, or one of their exec team directors had at least 1 year's experience essentially in investment banking. So that made it really difficult to sell because one, like it's really difficult to find like directors who have that specific experience.
Yeah.
And then have to get them to do an exam. And secondly, because we were so early and so small, anyone with that kind of cash in the bank didn't want to give us that cash in the bank. So it was like a rock and a hard place. And then and because this umbrella company or regulatory providers had no experience working with fintechs, they were just traditional fund management.
Yeah.
It was so painful. They wouldn't let us do anything. So that slowed us down hugely.
Yeah.
And then we should have, like, if we'd just done an angel round and raised, we would have been about like 9 to 12 months ahead of where we are now.
Okay.
And part of the other mistake we made, which was taking advice from Entrepreneur First, which was don't do a angel round, go out and do a big bang pre-seed round. Our legals took 5 months.
Oh my goodness. Yeah.
After we signed a term sheet pretty quickly, and then legals took 5 months. And the day we got our first angel check was the exact day we ran out of the 80K cash.
It's the classic story of like we were on the brink.
Yeah, literally. So like those are two mistakes that I would have done differently, just purely for execution speed.
Okay. Yeah. Okay. And speed is important.
It's everything. Yeah.
Oh, Pac, we could go on. We should probably do another one. I don't think half an hour, 40 minutes is enough. But yeah, thank you so much for joining us. It is a really, really cool story, and we're very excited to see where you go next.
Thank you, Mo. I really enjoyed the conversation.
Yeah, I'm glad.